Australians will spend the next 30 years paying the most expensive thing they'll ever buy, and many of them have no idea how the system actually works. Today, we are going to fix this. By end of this episode, you'll know how the home loan system actually works, all the government schemes available for first home buyers, and for existing homeowners, one phone call that can save you thousands of dollars. Here we have Tarwinder Saini, a leading mortgage broker with us, who will help explaining the home loan process today. Welcome, Terry, to the show.
Thank you, Karan. Thanks for inviting us today.
Thanks for coming. So I think we'll start with a very basic thing because many people, when they think about getting a home loan, they only know they can go to the bank they have banked with for life, and they don't know any other channels that exist. So for them, can you please explain who is a mortgage broker and what they actually do?
According to me, mortgage broker plays a very important role in the finance industry. Mortgage brokers are bound by one law, which is called best interest duty. So basically, we are obliged by the law as a brokers to take care of best interest of the customer, whereas banks are not obliged by this. So as a mortgage broker, we take care of the whole lending process where we qualify the customer, and then we basically take the customer to prepare their application, take it to the lender, and make sure the solution we are offering is the best solution and it's a long-term solution for the customer. So that's the role of a broker, to help the customer with the loan process.
So basically what I understand is mortgage brokers are experts who have access to various lenders, and they try to find the best possible alternative for a client. And so you are kind of an expert in loans. And when I think about an expert, one thing that comes to my mind is experts come with a hefty price. So how much a client or a person looking for a home loan, when they hire you as a broker, how much about type of cost they're looking at?
To your surprise, the mortgage broker service is free for all the customers. So we are paid commission by the lenders for introducing a customer to them. So there's no cost to the customer.
Well, that's huge. So basically an expert advice for free. I think that's win-win situation for everyone. And I feel like most people listening to this, they don't have any idea about brokers. They don't have to pay anything to the brokers for their advice. And I think that's the best thing to know for now. Let's move on to the main topic of today, that is a home loan journey. Can you explain the whole process from start to end? Basically, let's say I want a home loan in next 3 months. What do you think my home loan journey will look like?
Look, first we qualify the customer, and then we prepare an application and we take it to the lender, and we get them a pre-approval, which is generally valid for 90 days. And customer can go and look for the property they are after. And once they find their property, then we basically help them signing the loan document, and then help them settle the loan. So this is the whole process, loan process look like for a customer.
Well, that's well explained. But I feel like there are a lot of steps that you mentioned in this journey. So let's get in detail each step one by one, so that everyone understands each step properly. So starting with, as you mentioned, the first step is basically, checking the borrowing capacity of the client. And before checking the borrowing capacity, I think they need to either reach out to the bank to check it, or either to a broker, as we mentioned. So let's start with what basically is the right time to reach out a broker. Is it 3 months before when they finalize the property? Is it 6 months before? Is it 12 months? Or what is the right exact time when they should be like, now I should see a broker?
Generally, for a first home buyers, it's a new experience. So we will advise them to reach out to a broker 6 months prior they want to lodge application. So that's a good time. If there is something shortcoming in qualifying the customer, so we can work with the customer and get them ready for a loan application. In some scenario, if the customer have any adverse on their credit file, So we will recommend them to reach out to a broker at least 12 months before, so we can work with them to get them ready for a loan application.
Right. Are there any other things that you look on, like what all things are required, how much money they need for buying the property, any such kind of things?
Like for a first home buyer, like good thing is the government is very supportive, so they need only 5% deposit, and so that basically can enable us and them to buy a property. So this easy thing, and then there's some rules we can explain about. It's called genuine saving. So there's some rules around it. Like it has to be 3 months old. For I can give you example. Like suppose customer is looking for a 500K loan, so 5% is like 25K. So they should have this 5% deposit to contribute towards the purchase, and it has to be at least like 3 months old in their account, and the 20K, it has to be a minimum 25K balance over 3 months.
Right. So so basically, everyone who wants to get a loan, they need 5% savings, minimum to minimum. And you mentioned about first home buyers. It's specifically for first home buyers. Now, another thing is, in case, let's say, someone doesn't have that 5% savings, is there any way around they can do, or they still have to, need that, 5% sitting in their account for 3 months?
Like if they are renting, the rent they are paying can be considered towards the genuine saving. And in lately, like one lender, like they can consider a gift from gift to the customer as also part of the genuine saving. So there is few options to go around this, but generally the most lender would like to see like 5% in their account at least 3 months before we can lodge their application.
So that means if they don't have 5% genuine savings, they can either show their rental history and the lender will be okay with it. That's what you mean, right?
It can't be it can't equate to the 25K, the total figure.
Okay.
So suppose they have like 15K and they are short of 10K. So like 10K can be shown as from their rental history.
So basically, it's a sum that we are looking at. If they have some money in their account and some money they can show to, ultimately they have to equate that 5% to it.
Yeah, basically rental history can help them to qualify for their genuine saving.
Well, that sounds really good. So at least they have options for that. And in case someone doesn't have money to contribute towards a property, can they if they're saying they can get gift from the family, is that acceptable in comparison to genuine savings, or genuine savings is separate and the gift is separate?
So only one lender I know would consider a gift as a genuine saving. I can name that lender is Bank West.
Right.
But all other lenders, from my knowledge, they need a genuine saving. Gift can be part of the contribution the customer is making for the purchase of the property. Suppose sometime like the income, the contribution required by the customer is 10%, and they have 5% genuine saving, and the 5% part they can be from a gift from their family.
That's great. We have just started and I'm already starting to get some crucial knowledge out of it, because I don't feel like if I go to my bank, they will tell me all those things. And if they don't have such policies in themselves, and they're not going to tell me go to this bank or this lender, I think that's where mortgage broker helps a lot. So I think we're going to have a very good conversation today. Now, moving on to the main step, starting, as you mentioned, starting with the borrowing capacity. What are the essential elements that you look in when bank is calculating borrowing capacity? What are the things they are considering overall?
I think income is a very important part, and the other part is like the customer's liabilities and their living expense. So these are the three major factors that has to be considered evaluating qualifying a customer, how much they can borrow.
Now let's talk about these elements in a better detail. As you mentioned about income, so with income, normally I see there are different type of income types like full time, part time, casual. So does it matter if someone is a casual versus someone is a full time, or it's all same for the bank? It's just about the income they are getting.
Like it's each different lender have a different policies, and and they treat different income differently. So as a mortgage broker, our job is to find a lender which allows the client to have a maximum possible income. I can explain you that with the example.
Right.
Like if some customer have a overtime or a allowance income, and so some lender will consider 80% of that part of their income. Other lenders can consider 100% part of that income. And same like if customer have a rental income, some lender will consider 80% of that income. Other can consider 90%. So understanding the lender policy is a very important part, and this comes with the knowledge and experience which mortgage broker applies. So like from client to from case to case, like like the borrowing power can be different from 10 to 100K. Like
Oh, that's a big number.
yeah, so there can be a difference. So by analyzing the income and connecting it to a right lender, so the loan customer can borrow from, it can be a difference up to 100K.
Okay, so what I understand from this is there can be chances, let's say if I have rental income and I'm making $20,000 as rental income, so bank is not gonna take the whole 20,000. They're gonna reduce it to 80% of it, and then they're gonna consider it. That's what you mean?
Yeah, that's right.
So that and you are also saying that different lenders have different kind of policies. Some do it 20% and some do it even more. Is it the case as well?
Yeah, that's right. Like in case of commission or allowances and rental, so different lender have different policies, how much they can consider towards the servicing of loan. So some can consider 80, some can say 90, some consider 100%. So knowing their policies and taking the customer file to a right bank basically can increase the customer's borrowing power, and it can make a like a big difference whether they can afford to buy the house now or in a 6 months time.
Right. I think that's why you mentioned it's better to come 6 months before so that you can analyze all these things before, and customer doesn't have to wait for another 6 months once they have already finalized the property or they are willing to get the property right away.
Yeah, it's very important for a customer to get involved with the professional at earliest possible, so then they can help them to secure the property,
Right.
or a loan.
So that makes complete sense. Now, moving on to the second element you mentioned, that is expenses. Now, as you said, bank is very conservative in terms of income. They shade it to, let's say, 20% or more than that. Is there anything similar with expenses? Like, for example, if someone has $1,200 or $1,300 of expenses, let's say I'm a single person, I don't have that kind of expenses, and I'm like, this should be my expenses, and bank should give me borrowing capacity based on my income and whatever income is left with me. That's my basic understanding how a bank should give the borrowing capacity. Can you explain a bit more on it?
Like you mean the living expenses?
Yes.
So in lending terms, the term the lender uses HAM. It is basically proportional to the income a customer's income. Higher the income, this figure increases, the HAM increases. So even if the customer living expense is lower than the HAM figure, but the lender will go by the HAM figure to when they are analyzing analyzing their borrowing power. So generally, like I can give you example for a single customer, the HAM figure is around like 2200 per month, and someone married with the one dependent, it can be around $3,800 per month. So they will consider that's the minimum expense of a customer when they are analyzing their borrowing power. So even if you have a lower expense than HAM, but bank will analyze on that minimum figure. So so like if someone have a higher, we have to analyze customers' bank statement to verify their living expense. If someone has a living expense higher than the HAM, so we have to declare that will affect their borrowing power.
Oh, right. So you mean to say even if I have lower expenses, bank is not gonna take care of it. They're gonna be like, this is a national standard or this is their standard, and they're gonna take my expenses according to that. So even though if I have more actual left money with me at end of the month, they're not gonna consider it. They're gonna consider what a usual person sitting in my situation is going to spend. Even though if I am being conservative myself, saving some money, not spending much. That's what you mean, right?
Yeah, that's right. You can develop your saving with your habit of saving, but the living expense is directly like bank will consider proportionate to you how much you are earning. If you are earning 100,000, your living expense will be considered at a higher rate, and someone earning 70,000, even if you are you're actually spending less, it's a standard how and it's used by all the lenders, so it is not different from lender to lender. So it's the same ham figure that will affect the borrowing power of the customer.
Ooh, so I think it means even if I have good habits of saving money, it's not gonna help in my borrowing capacity. Bank is going to take what other people spend, like the average spend of a person in my earning bracket, and they're gonna put my borrowing capacity based on my standard expenses, right?
Yeah, that is
That's
correct.
not good. That's not a good thing, I'll say, for the bank to do. But I think it makes sense as well. So now moving on to the next element that you mentioned were the liabilities. Now, can you explain more about liabilities? What are the common type of liabilities you normally see with people, who bring in the loan application to you?
Like most common liability for a customer is a credit card, and sometimes they have a personal loan or a car loan. And you probably aware like now when someone is shopping, there is a lot of offers in the shopping center, which is called buy now pay later.
Oh, yes.
And generally the customer have a sense like that is not any sort of a credit, but nowadays it is listed on their credit file, and so it they considered as a liability for the customer.
Oh, right. Okay. So you mean to say the afterpay or zip pay kind of things that we normally take that we don't even if we don't use and we have it, bank is going to consider it as a liability, right?
Yeah, it doesn't look same as credit card,
Right.
but still you are borrowing money from a third party to buy things.
Now, with that, I understand, as you mentioned about credit card as well. So let's say if I have a credit card of $20,000, but I'm only using like $5,000 of it on a regular basis, I just have a higher limit. So does it affect my borrowing capacity? Will the bank take the actual liability that I owe on the credit card, that is $5,000, or the $20,000 is gonna be the one that's bank gonna take?
Yeah, when we are analyzing the borrowing capacity of the client, the lenders will consider the limit of the credit card. Suppose someone have a credit card of 20K and he have only used 5K. So bank will put 20K as their liability when they are lending to them. So it's important, and it can make a big difference in their borrowing power.
Right.
Like, for example, if someone has a 20K credit card limit, and they are able to close that credit card, they would be able to increase their borrowing power roughly by 50K.
50K is a big number. So even if we have a card with a limit, and if we close it, we can increase our borrowing capacity to such a big level.
Yeah,
That's a good thing to know. I think it's going to help a lot of people who have credit cards sitting with them, even though if they are not using it, and when they are going for a home loan, they are getting a lower borrowing capacity. So I think this trick they can use. They can just close their credit cards, and it's going to affect. It's going to increase their borrowing capacity. That's a good thing to know. That's a very good thing to know. Now, I think we know how the borrowing capacity works now. Now, moving on to the next step is actually choosing a lender. So, what is your thought process when someone comes to you and you have tons of lenders with you, and which lender to choose for which person? How do you think about it?
So we focus on the solution. Like, if we are able to achieve a solution, so part of solution is how much the customer is looking to borrow, and next thing is we will concentrate on the rate and fees and charges which the bank lender is going to charge the customer. So that is our main focus. So solution and how much it's gonna cost, and if they have customer have any personal preference of a lender, so that we can also consider whether they want to use that lender on a daily basis, or like if they like their internet banking or anything. But generally, main focus is the solution for the customer, like that enable us and them to secure a home for themselves.
Right. So it's not just one thing that you look at. Let's say, because mostly, when I see myself, if I am analyzing a loan for myself or going through the websites online, one thing I look at is the interest rate. I'll try to get the best deal possible for me in terms of, let's say, if one lender is giving me 6%, other one is giving me 5.8%, I'll be like, let's go to 5.8% because it's going to save me 0.2% on it. But you mentioned there are other factors as well, because that lender, even though he's giving you a less rate, but the borrowing capacity may differ considering the policies of the lender, and that's how you're gonna help. That's how you're gonna consider if that 2% is worth it, 0.2% is worth it on choosing this lender, right?
Yeah, that's right. Like so, rate can't be always a deciding factor. So we have to see what the lender's policy around the income, and also like if they charge any, are there any hidden charges. So we try to make sure the customer is getting a best possible tailored solution according to his needs.
As you mentioned about hidden charges, now one thing that comes to my mind is like, what sort of hidden charges that normally a customer can't even think of the bank may charge to them?
Some of charges I can say, like some lenders can have like a annual fee, home loan fee, and they can also charge valuation fee, and their settlement fee can be different from lender to lender. So we make sure so that the customer doesn't pay extra where there is no need.
All right, so it means it's just not the interest rate that we have to look at. It's basically the fees as well, because it gets associated over the term of the loan as well. And that's a good thing to know. And one more thing I wanted to ask is, just in the morning itself, when I was scrolling through, as I'm searching, for home loans while I'm interviewing you. So as part of my research, I'm getting a lot of advertisements from various lenders, that are mentioning very low rates, and there is another rate next to it. One is interest rate, and I see another rate next to it. What exactly is that? I couldn't interpret very easily.
So are you saying there was an interest rate and there's a comparison rate?
Oh, I think yes. Comparison rate. That's what was mentioned there. Yes.
Yeah. So comparison rate is a important figure to consider, because it is associated with the how much the loan gonna cost over the 30-year period of the loan. So I can explain you a bit, like sometime the lenders will have a special rate at the start of the loan for 1 year or 2 year, or customer can choose to fix a rate their loan at a lower rate, and when they come out of that period, the lender might charge them higher variable rate. So that will might end up costing the customer more over the period of the which is 30 years. So it's important to have a, and also that, and the fees and charges which lender is charging for the home loan can be is part of that comparison ratio. So that is a good indicator whether that loan is costing the how much it's costing to the customer over the period of a loan term.
Right. So I think that's a good clarity, because I always thought when I'm, when I'm searching for loans, I look at just one rate and I don't look at the other one. I was like, it's something going at the back on the bank, because it's not very explained in a neater way when banks are advertising it. And so with this, I also understand that it's more than the interest rate. We should look at the comparison rate to know what is the actual cost that I'm paying, because it's not just the interest. As you mentioned, there are a lot of fees and charges as well. And overall, our goal is to save money over the period of loan, not just that particular period, right? So I think that's a very good and important thing to know. And that's really nice. Now we have a good idea about the interest rate and everything. The next step I can think of is moving on to with the application. We have all the things in order now. What all documents you normally need when someone is looking to get their home loan?
So I think income document can be more important. Like for a self-employed, is tax returns.
Right.
So someone salaried person, we ask for at least 2 pay slips.
Right.
And in some cases we have to, like suppose the client have a other type of allowance, and other, then in that case we have to ask for income summary and tax returns as well. And also if they have any current liabilities, for example credit card or personal loan or car loan, so we tend to ask for 3 to 6 month statements as well. That's give us more information to analyze, and we can also we can ask their living expense statement, and if we require a genuine saving statement as well to analyze their saving over the period of 90 days.
So this step is basically, I think you mentioned in the starting when you were explaining the home loan journey, is this called a pre-approval process, or is it directly lodging the application with the bank? What exactly it is?
So we can choose both the path, and pre-approval path or a full approval.
Right.
So if customer already finalized the property they're buying, then we can go for a full application. And if they have not finalized their property yet, so we can lodge a pre-approval application. On the approval, the customer will get 90 days to find a property.
Right.
And then once the customer finds a property, and then basically we can apply for a full approval.
Right. Now, as you mentioned, pre-approval is before finalizing the property. Is it considered as a full green flag? We have got a pre-approval and bank is going to lend me that amount of money that if I find a property in that range in which we have applied the loan for?
Generally, the pre-approval is a conditional approval.
Okay.
So it is basically based on the information we provided to the lender. If anything, for example, income or a liability of a customer changes, so that pre-approval can fall apart. And the same time, customer have to keep a good conduct on his accounts and make sure if he's have any repayment he's making, he have to have a good conduct, he have to make the repayment on time. So because the all the repayment these days for their credit card or any other liability are basically reported to creditor reporting agencies on the monthly basis. If the conduct is not changed, or then lender can choose to refuse, like lender can choose to uh, change their pre-approval.
Oh, so they can deny the application
Yeah.
if things change between the
Yeah.
period. So, when you look at, you have dealt with so many clients now. Like, do you see many clients who do such things that they are not even aware of, because they'll be like, we have got the loan, we have got the pre-approval, and now we can do whatever we like. And at end stage, later you get to know that something like this happened, and the bank has rejected the application, and now client is under a big stress because they've already paid the deposit, and such kind of things. Have you faced such issues?
Like we never have to face this issue, because we try to explain them, the customers, in detail when they have a pre-approval, and what does it means to them, and what is their obligation. So generally we have very good customers. They understand the whole process, and generally it's very important decision of their life, and they take our advice seriously generally.
I believe customers are customers. I think it's more on a expert or a professional they are dealing with, who has to advise them in a right way, and that's how they can deal with. Because many people who don't have an idea about, if they get another liability after getting the approval, they will just lose something because they didn't know about it. So I think that's where professionals like you help.
Generally they don't go for another lending. Generally they tend to miss their repayment on credit
Okay.
cards.
Right.
So that can paint a very negative picture for the lenders, because they are getting into a new contract with that lender, and lender see that they don't have a right conduct or a right habit. So making a repayment on time and in an organized manner is very important. So because it's affect your lending, and so it's very important to have a very good conduct on all your kind of all the repayments, whether it's a credit card or a home loan or a car loan or a personal loan.
Right. So ultimately, the conclusion is, when you get a pre-approval, you have to you have to continue doing the right thing. It's not like you've got the pre-approval, you can miss your repayments or those kind of things.
Yeah.
That's a good and cautious thing to know. And I think a lot of people are gonna be saved, by this. Even if they're applying home loan directly by directly going to the bank, I think this podcast is going to help them in some way. As well. So now everything is done. I think the next step, we have got the pre-approval, and let's say we have also finalized the property. The next step is what is the next step going to be like after we go with the bank with the signed contract?
Like if when the customer have a pre-approval,
Right.
so he go and find his property suitable to him, and according to the pre-approval, the amount he have. So once he finalize the property, and then he comes with the he provides a contract of sale of the property to us. We order a valuation, and if valuation comes good, then next step is we order a loan documents for the customers, and then customer sign the loan document. And once customer signs the loan document, it goes into a settlement stage. So then at that settlement stage, the clients conveyancer get involved. They basically liaise with the lender and all other involved parties on the behalf of client.
Right. So how does the settlement day look like for customers, for you, and because for customers, they're getting the new home on the settlement day, and for you, is there any step pending for you during the settlement day, or is it just the conveyancer who are dealing with it now?
So we are in communication with customer and the lender in this whole process. We try to make we ensure that it's a very smooth transaction. So the lender have everything they need, and any contribution, client contribution, is in a correct account.
Okay.
And if there's we make sure that there's no shortfall, and the conveyancer have all the required information. So basically, uh, um, we make sure like the settlement goes smoothly.
Right,
We
right,
communicate with all the parties, lender, conveyancer, and we make sure it's a smooth process for everyone.
right. And you mentioned something about shortfall. What happens in case such kind of error happens, and what do you do in that cases?
Like generally, the lender or conveyancer communicate to if there is any shortfall or any shortcoming in somewhere, or then basically we act very quickly, and we make sure the settlement it is fixed and the settlement goes through.
I think that's well covered. I think we have covered all the steps now. And one last thing that comes to my mind is uh, what all other professionals are involved in this whole process. You mentioned definitely a mortgage broker yourself, and then it is a conveyancer. These two names I have heard till now. And are there any other people involved in this whole process? And what are the estimated rough cost associated with them?
Like as we already mentioned at the start, the mortgage broker service is free to the customer.
Right.
The conveyancer generally cost around $800 to $1,000 to the customer.
Right.
So there's no other cost for the customer until the settlement. But once the loan settle, so we are required to organize customers meeting with financial advisor. So basically, the client has taken a big a loan, and so basically they discuss if the client is require any insurance, and
okay.
how to minimize their risk. Like they can advise them with if they need any insurance for the mortgage, or
Right.
or any life insurance. So if in case any uncertain things happen in their life.
Oh, that's good to know as well. So it doesn't end at the settlement then. It's basically there are steps after as well. Once you've settled the property, professionals like you make sure the customer is in safe hands after that as well. Anything happens in future, you refer to the right people, and I think that's a very good financial decision, because definitely, as you mentioned, loans are one of the biggest financial decisions people make, and I think financial advisors play a key role shaping it forward. That's also a great thing to know today. Now, as definitely, as we mentioned, home loans are the biggest decisions people make. Now, first home buyers lie in that category, who doesn't know anything and who needs help from people. Now, is there any sort of help that we get from government as first home buyers?
In Australia, the government is generally very supportive uh, for to the first home buyer. They make sure they help first home buyer to secure their first home. So
Right.
there are many government scheme. One I can mention here is first home buyer guarantee scheme, where the government is granting the loan on the behalf of the customer, and saving LMI for the customer. Generally, it's like a saving of around 20K depending on the loan amount. And some scheme are like state scheme, where the state government is waiving the stamp duty. In case of Victoria, for example, customer buying a property, first home buyer buying a property up to 600K, they don't have to pay stamp duty. Like also if they are building, suppose they're buying a land to build their first home. So they basically don't pay stamp duty on the land. Also, they get a $10,000 extra to build their house. So there are like a very it's the whole process is really supported by the government.
Right. So you meant saving on LMI, saving on stamp duty, and the other one you mentioned was the
$10,000
$10,000. So
builder
I
grant.
think overall, when I calculate it in mind, it comes more than $50,000 of saving for first home buyers, and that's a huge amount. Am I correct?
Yeah, that's right. The first home buyer can save, like basically, government is assisting them with the help of 50 to 60K.
Right. That's a very big amount, and I think that's very crucial to use all the schemes in a better way. And I think definitely professionals like you can, you know, structure it in the right way so that people get the best benefit out of it. Now we have covered schemes for first home buyers. Now let's move on to existing homeowners, people who already have their loan, and we want them to give a real benefit out of this podcast as well. What is one thing that you'll recommend them in terms of tips and tricks that they can do right now after this podcast, which will save them some money?
Like it's important for like as a mortgage broker, like we basically reach out to our existing customer on like a yearly basis. So or any if there any major event in the market, like if there is a interest rate change in the market, so where like we we make sure they are getting the best interest rate. So as a mortgage broker, we have a tool to run a pricing past the existing lender like they are with. So sometime using that tool, we are able to secure a better rate. And also, if there is a shift in the value of the property, so suppose the value of the property gone up, that will change the LVR of the loan, which is loan to value ratio.
Right.
So if that improves, then the customer can secure a better interest rate based on the LVR, current LVR as well.
Oh, right. So that means if the property value goes up, you can just call your bank and they can even help you in that way. Like they can lower your interest rate. That changes. That's what you mean, right?
Yeah, it can be the rate can be reassessed,
Right.
and the customer can be offered a better rate.
And it can only be done through the broker, or they can call them themselves as well and negotiate it themselves.
Like if the loan is done through a broker,
Right.
so the first contact for the customer is broker,
Right.
and generally good brokers are very helpful, and
Right.
they try to make sure their existing customer are on best possible rate.
And if people who have not engaged a broker, how can they get the benefit of the situation?
And then I think I would say still they can seek a help of a broker, like even if the loan is not through a broker, but broker can still be assist the customer to check whether they are offered a best rate, and if they are looked after by the current lender, and if they have option to refinance their loan to get a better offers at the same time.
Right. I think that's a very good thing to know as well. So right after this podcast, people can either contact you or any mortgage broker they have, and they can just tell them to run a pricing request that you mentioned. And if the property value has gone up, definitely they'll get a better deal, and it will save them thousands of dollars on this as well. Just and that's a great thing. And now let's wrap this whole podcast with a real action plan. What do you? I think let's make two action plans: one for first-home buyers and the other one for existing homeowners. What will you give them right now?
Like for a first home buyer, it's I will suggest them to reach out to mortgage brokers earliest possible time.
Right.
And so generally, like if they have 6 months time up their sleeve to get them ready to secure a loan in the market. And for someone seeking to buy an investment property, I think generally they are already exposed to a loan process, so
Right.
they have a good understanding of the loan process. But in their case as well, I think 3 to 6 months is a good time to reach out to a broker and make sure that they're in a good position to buy secure their next property.
Well, this has been incredible. And now the last question that I'm gonna ask you, which I'm gonna ask every guest who comes on the show, is what's the biggest decision you have done, you have made yourself, and what did it teach you?
Like in Australia, generally buying a first property is a very big decision for anyone. Um, from my experience, is very crucial, and it's helps you build your equity. Um, I think I will suggest anyone to buy their first home as soon as possible, and get in touch with the professional and get the required help, and secure your first property, because it's also is an investment at the same time.
Right. Honestly, I'll say this is one of the best conversation I personally have had about home loans, and I hope this conversation helped the listeners as well. So I think let's complete it today. I am Karan Bari. This was Big Decisions. See you next time.